What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. One of the more striking results to come out of Putin's visit to Beijing for the Winter Olympics is a special joint statement between Russia and the People's Republic of China. The joint statement, to quote state media, focuses on international relations in a new era not defined by the US. The Sino-Russian statement includes firm oppositions or serious concerns over the, quote, expansion of NATO eastward, end quote, the, quote, West-led ideological clique in the name of democracy, end quote, the US Indo-Pacific strategy that, quote, threatens regional stability, end quote, the trilateral security partnership among Australia, the US, and the UK, and, quote, US domestic and overseas bioweapons activities, end quote. State-run Global Times, speaking to a senior research fellow at the Chinese Academy of Social Sciences, wrote yesterday on the statement, quote, it's the first time that China and Russia released such a long statement after the meeting between the two heads of state, which includes all the major issues and strategic questions and shows that China-Russia ties have reached an unprecedented level, end quote. Washington-based and well-respected veteran China analyst Bill Bishop observed on the statement today, quote, the statement is nearly 6,000 words and reads like a manifesto for a new world order, striking how much of it reads like PRC priorities, with only a few bits added in for Russia, end quote, implying that Russia is very much a junior partner now, something that may well sting a few of the more conservative officials in Moscow. Now let's touch on some of the points discussed in the statement, because it tells us a lot about Sino-Russian intent and what the two sides agree upon when it comes to their view of how the world order should develop, and their critiques of the current US or Anglo-American-led world order as it stands. A lot of these ideas shouldn't be too new or surprising for us, because we have been following their formulation with top party officials in China over the last 12 to 24 months, and so we've seen these ideas develop in Beijing. Quote, today the world is going through momentous changes, and humanity is entering a new era of rapid development and profound transformation. A trend has emerged towards redistribution of power in the world, and the international community is showing a growing demand for the leadership aiming at peaceful and gradual development. Some actors representing but the minority on the international scale continue to advocate unilateral approaches to addressing international issues and resort to force. They interfere in the internal affairs of other states, infringing their legitimate rights and interests, and incite contradictions, differences, and confrontation, thus hampering the development and progress of mankind. The Chinese side is sympathetic to and supports the proposals put forward by the Russian Federation to create long-term, legally binding security guarantees in Europe. End quote. Now we'll have more on the massive energy deal that was made between China and Russia during Vladimir Putin's trip to Beijing over the weekend later in the video, but first let's move to Chinese economic, financial and technology developments from the last few days. In what Chinese financial analysts with Caixin are calling a turning point for China's new energy vehicles, new data shows that the country's new energy vehicle industry saw several key milestones last year, one of which is a record in sales. China produced 3.54 million new energy vehicles, selling almost all of them. In 2021, new energy vehicles made up 15.7% of the country's car market. Caixin writes that experts predict that new energy vehicle sales in China will jump to 5 million to 6 million this year, taking 25 to 30% of the domestic auto market. A report by Sinolink Securities Co. expressed that a market penetration rate of more than 20% would, quote, mark a major turning point, meaning that early education of the market is basically complete and the supply chain is beginning to stabilize, end quote. Last year, sales were up 181% over 2020. China is currently the largest producer and consumer of new energy vehicles in the world. Some of us may remember back in 2020, Chinese startup and Starbucks competitor Luckin Coffee Inc. was kicked off the NASDAQ in the United States due to a fake revenue scandal, To jog our memory, on the 2nd of April 2020, the company announced that an internal investigation found that its chief operating officer had fabricated the company's 2019 sales by around 2.2 billion RMB or 310 million US dollars at the time. And we covered this development at the time as well. Before the scandal, Luckin had been seen as one of the most promising startups in China, with investors including the likes of Goldman Sachs. Over the last week, Luckin announced that it has settled its fraud charges and has agreed to pay 180 million US dollars. Luckin is working on a series of compliance procedures in order to relist on the Nasdaq. In a filing to the Securities and Exchange Commission, SEC, the company said it received notice from the securities watchdog that it, quote, satisfied the civil penalties arising from its previously disclosed settlement agreement, end quote. Statements about New World Order aside, a key component to Sino-Russian relations has always been energy and the complex dynamics of Chinese energy security. In a statement over the weekend, majority state-owned Russian energy giant Gazprom PJSC confirmed that a deal had been reached for a 30-year supply deal with China, which will greatly increase the amount of natural gas it pumps into China. According to Gazprom, the deal will deliver an extra 10 billion cubic meters of gas to Chinese state-owned China National Petroleum Corp via the Far Eastern Pipeline. This is the second major gas supply deal signed between the two state-owned giants. In 2014, the two signed a deal to build a pipeline linking gas fields in eastern Siberia with northeast China. The deal was valued at 400 billion US dollars. The pipeline has already been in operation for about 3 years and set to supply China with up to 38 billion cubic meters of natural gas a year by 2025. Chinese financial media outlet Caixin observes, quote, the announcement comes as China accelerates a switch to natural gas, a marginally cleaner burning fossil fuel than coal, and as relations between Russia and its major gas export partners in Europe fray amid mounting tensions on the Ukraine border. Market observers estimate that China's natural gas consumption reached 360 billion cubic meters in 2021, up 13% year on year, nearly half of which was imported. End quote. UK-based Reuters reports that the pipeline is scheduled to begin operations within 2 to 3 years. But these two deals, the earlier one and the one signed over the weekend, are very small compared to the Power of Siberia 2 pipeline project that Gazprom has on the cards. The Power of Siberia 2 pipeline is a proposal to build a pipeline to pass through Mongolia and supply up to 50 billion cubic meters of Russian natural gas annually to the People's Republic of China. And last up, the Year of the Tiger got off to a bad start for several property developers still navigating China's Evergrande Housing Crisis. Quickly, if you're enjoying the episode, don't forget to hit the like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. First up, according to Bloomberg's Hong Kong-based team, major property developer Logan Group Co.'s dollar bonds are set to decline to their lowest level in weeks amid rising concerns about the Chinese developer's hidden debt. Quote, Logan's 2.5% note due 2025 fell 4.6 cents on the dollar to 60.6 cents on the dollar Tuesday, on pace for the fourth daily drop. Hong Kong listed shares of the company, the nation's 20th largest developer by sales last year, also declined to their lowest level since 2017. Weighed by Logan and other weaker borrowers, Chinese junk dollar bonds fell 2 to 3 cents. End quote. Second up, in an exchange filing late yesterday, Fantasia Holdings Group Co. announced that its January property sales totaled only 510 million RMB, representing a massive 78% fall year on year. Its stock price has collapsed 75% over the last 12 months. And the third major developer to touch on today is Shimao Group Holdings Limited. Hong Kong media is reporting that the company's chairman is in talks to sell his stake in a luxury development project in Hong Kong. This news is further evidence of the desperate position the chairman is in to maintain credibility in his major development company, coming hot off the heels of another move back in January to sell a 40% stake in another luxury project in Hong Kong to a joint venture for 1.05 billion Hong Kong dollars, or 135 million US dollars. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.